The equity markets continuing their choppy experience here in August of 2024. What signs are we seeing suggesting maybe a further decline versus a nice recovery from these previous pullback levels? I'm Dave Keller with Market Misbehavior. Today we're going to talk about 3 market sentiment indicators, all implying further weakness to come. Before we get to those 3 sentiment indicators and their takeaways, here's one more thing I wanted to tell you about. I spent many years earlier in my career working for large financial institutions. And when I left the institutional world, I remember thinking, what am I going to do to replace these big, expensive, but powerful institutional investing platforms that I've had access to this whole time? There is an option now for individual investors and financial advisors, and it's called Koifin. Koifin really combines some of those great capabilities of the big, expensive institutional platforms, along with some capabilities really optimized for financial advisors and high net worth individuals, and puts it in a very low cost, underpriced package on a web-based platform compared to the possibilities that you can achieve by using said platform. One of the features I love to use on Koifin are the ETF holdings. You can take an ETF, you can like the QQQ, you can look at the biggest weightings, you can look at weightings by sector, you can run some basic attribution analysis. So for ETFs that you own or that you're considering owning, doing the due diligence of really understanding the exposures you're going to get is super important and super powerful for your portfolio. If you go to marketmisbehavior.com/Koifin, you can get 10% off any new membership. I hope you will check it out, and I hope you will find it as meaningful and powerful and impactful as I have found myself. Now let's get back to the charts. So the first indicator to talk about, of course, is the VIX. And I would say for me, sentiment relates to volatility, it relates to positioning, and it relates to survey data. The idea with market sentiment is, besides just measuring price, which I would argue is one of the best, if not the best ways to measure market sentiment, just simply whether the price is going up or down. If you want to get deeper into sentiment indicators, you have to go to different types, right? So volatility is a measure of movement in the markets, often derived from the options market, which is called implied volatility. The VIX is the indicator we'll look at there. Another indicator we'll look at is the NAAIM Exposure Index. That third one is the AAII Survey. We'll start with the VIX, and we just did a video earlier this week talking about the VIX, and I'll put a link below if you want to go in a little more detail. But the reality is, with the VIX spiking over 65 over the last week, that's actually the 3rd highest reading we've had since the great financial crisis of 2009. Back in the COVID low in 2020, the VIX got up into the mid-80s, and it was a similar peak, slightly lower if I remember right, after around 2009 to 2010 as the volatility really got extreme during that incredible sell-off. So this week we've had the 3rd highest reading, which means in all those other pullback phases, including 2022, which was a pretty long and protracted bear market phase of about 9 to 10 months. Pullbacks in 2010, 2011, 2015, and 16, 2018, none of those matched the spike in volatility that we have seen here recently. So when the VIX gets above 15, I tend to think of it as exiting the slow and steady bull market phase to more of a slight pullback. When the VIX when the VIX pops above 20, that is, I suggest that the volatility is getting into more of the measure that we often have during market pullbacks, significant pullbacks in the 5 to 10% range. VIX above 29.5, and especially a VIX above 40, is usually only reserved for a very small number of observations that have been significant drawdown. So the fact that we are seeing that level of volatility before we've seen a real sustained decline makes this a very unusual reading, and has led many to speculate that perhaps the VIX is broken. Maybe the rise in zero DTE options, which happened during the last couple of years, maybe that is skewing the VIX and making it appear more or less volatile than it really should be. So that's one sentiment indicator, which again, the pure reading of it tells me that it is certainly setting up for some sort of corrective move, deeper and more protracted than we've seen so far, because that's what's happened pretty much every time the VIX has spiked above 30 or 40. Let's talk about 2 other market sentiment indicators I think you should know about. The second one is the AAII Survey. This is the American Association of Individual Investors. I like this survey because it's been running for decades. It is a very simple question that is asked of a bunch of individual investors every week. Around Wednesday, the survey is closed, and they're asked, are you bullish, bearish, or neutral on stocks for the next 6 months? And you track those ratings every week. They come out Thursday, and what's great is you can track changes in sentiment over time. A couple things that I like to look for. Number one, does the level of bearishness get extremely high, right? Usually a bullish reading above 50%, so over half of the respondents are bullish, usually means there's a euphoric optimism for stocks. And while that doesn't necessarily mean the market's necessarily going to go down in some sort of contrarian move, it certainly tells me to look for signs of distribution, because that often happens soon after. Second thing I'll look for is the comparison of bulls minus bears, right? Which has more, right? Do you have more bulls than bears, in which case the general sense is more optimistic? Do you have more bears than bulls, in which case the sentiment reading is more pessimistic? Look at what happened here in the last month, and you'll see why I think this indicator is worthy of attention right about now. And to be clear, this is one of those indicators that I don't think it signals all the time, right? Certain indicators like MACD or something are kind of always giving a signal, right? A buy signal or a sell signal, they're kind of tracking the trends. Something like the AAII Survey is more giving you background. It's more giving you context, and I think describing the conditions about the market. It's more about understanding the scenario or understanding the general conditions around you as an investor. About 4 weeks ago, 3 weeks ago, that is, you can see the AAII bullish reading got above 50%. The last time we got above 50% was in March, April, leading into that April pullback. Before then, it was December of last year, just before a brief pullback at the beginning of this year. And you can see major pullbacks have often had the bullish reading get above 50%. And that's why I like to look at it as a bit of a leading indicator, telling maybe we are starting to near an exhaustion point, or at least we're so euphoric, I'm starting to look for signs that that euphoria is dissipating. In the last 3 weeks, you can see that the AA bullish reading has come down. So we went from around 52% now to around 40%, which is where we ended this week. The bearish reading a couple weeks ago was around 22%, and now it's around 38%. So we've had a big swing of a lot of people that were bullish are now bearish or neutral, and a lot of people that were a lot more people have gone from neutral to bearish and probably bullish to bearish as well. So you can see that the difference between the two is actually very, very low. And I have this series at the bottom where we're actually showing the spread between bulls and bears. So at a positive 3, that means 3% more bulls than bears. The last time we went to a negative reading, meaning bears had outnumbered bulls, was not too long ago, and it was actually at the April market low, the previous major low, and really the most significant low we've experienced so far in 2024 until this July-August period, which is still, I think, very much an open question. So you may say, well, hold on, if that's where we get during a major pullback, does that mean the pullback is over just like it was in April? Not necessarily. What you'll also notice is if you go back to August of 2023, we went net negative, and that was actually during this broader decline. That was actually after the initial pullback in July, the bounce higher in August, and then we accelerated lower for about another 6 to 8 weeks after that signal. So the negative reading, the net negative of bears over bulls really was signaling that there was a much further decline. You also notice back here in late 2021 into early 2022 that bears far outnumbered bulls. As a matter of fact, in some of the lowest spreads that we've seen, you can see the bearish reading got all the way down to 50 or even 60%, while the percent of bulls was below 20%. So that's what a major market low, or seriously, or certainly the end, getting to the end of a bearish phase starts to look like. That sort of extreme pessimism, which for me tells me to start looking for signs of accumulation. So when the indicator is very euphorically bullish, I look for signs of distribution, telling me that that optimism is now starting to wane. I think we've seen that. We may be at a tradable low here. I don't have a crystal ball just like you don't, but I would tell you what differentiates the actionable pullbacks like we saw in April of this year and some of the more protracted declines like we saw in the fourth quarter of last year and even for much of 2022 is simply that the trend continued lower. I think when sentiment starts to rotate this quickly, you really need to become more of a trend follower and track the trend lower. Think of this market as guilty until proven innocent and look for signs of accumulation. Look for signs of a pop higher, which could confirm that whatever distribution is causing this pessimism is now starting to dissipate. Signs of accumulation are marked by higher lows, are marked by breaking above trendline resistance, breaking above key moving averages. These are all the things that I'm looking for right about now as we continue to be in a choppy and I would argue still negative trend, negative primary trend for stocks. Another one I'm going to show you, just because it changed a little bit, it differed a little bit from the AAII survey here recently. This is the NAAIM Exposure Index. NAAIM stands for the National Association of Active Investment Managers. So while the AAII survey is predominantly individual investors, this is more money managers, wealth managers, people that manage other people's money of varying sizes. Similar idea, they respond to a weekly survey and they talk about, instead of bullish or bearish, they actually talk about their positioning. The question is, what percent are you allocated to equities? And you actually can go leveraged long, you can go leveraged short, and anywhere in between, and you reply with a percentage. About 5 weeks ago, this reading was just above 100%. And just like 50% bulls on the AAII survey, was sort of that red flag, euphoric signal for me. The NAAIM Exposure Index above 100% tells me, all right, we're very euphoric. Money managers in this survey are leveraged long, which means you're looking for signs of distribution. We certainly have seen that here. And what I wanted to point out is that in the beginning of July, while the AAII bullish reading was still going higher, meaning individual investors were getting more and more optimistic going into the eventual peak, money managers in this survey were actually lightening up. This is one of those really cool but rare times where the quote-unquote smart money, as reflected by money managers, actually showed a bit of a leading indicator, indicating that they were getting defensive in early July, while individual investors, as measured in the other survey, were actually continuing to press on the long side. Of course, since that euphoric reading and since the initial drop, we've seen the NAAIM Exposure Index continue to go lower. It's still pretty average, around 75%. In real bearish readings, it's gone down to 10-20%, occasionally to single digits, but very, very rarely. So overall, this tells me that there's still some bearishness to be had, meaning if we continue to go lower, I wouldn't be surprised if money managers in the survey continue to unwind. But the fact that we've gone from leverage long to now much more of a neutral, if not slightly underweight reading in about 5 weeks from the end of June tells me that money managers are really starting to take their foot off the accelerator and really stomp on the brakes, as you would when you're getting close to, I don't want to say crash, but getting close to a vehicle-related incident, I guess is what I would say. So those are 3 sentiment indicators I'm paying attention to. Number 1, the VIX. And with the VIX reading over 20 and recently going above 60 for only the 3rd time since the great financial crisis, tells me that we're in a period of elevated volatility. Now, there are a lot of reasons why that could be happening based on macroeconomic events, based on the options market and how that's changed. But I'm inclined to believe that elevated volatility is probably going to be the rule as opposed to the exception here in the weeks and months to come. Second indicator is looking at the AAII survey. Again, went from very bullish, euphorically bullish, in fact, to almost net negative for the first time since the April market low. And while you may be tempted to think, all right, that means we're at a tradable buy point, not necessarily. You have to remember that when we're in a declining period, you want to look for signs of accumulation. That's what I'm not really seeing enough of yet, although this week certainly was a nice bounce off of the low earlier this week. Finally, the NAAIM Exposure Index, a bit of a leading indicator this time around, showing that money managers in the survey were actually starting to lighten up while the bullish sentiment was continuing for individual investors. Now that ratio or that survey has come down quite a bit, similar to what we've seen after major peaks when investors start to lighten up their portfolio and get into other more defensive asset classes like bonds, which happen to be doing quite well. Which market sentiment indicators do you follow and use? Are there any that I talked about or something I didn't touch on? Make sure you drop a comment below and let me know. Also, very keen to know what other technical indicators, market sentiment gauges, or any sort of market structure or behavioral or technical ideas you want me to go into. Drop a comment below and let me know, and I'll consider it for a future video. For Market Misbehavior, I'm Dave Keller. Have a great one. We'll talk to you again soon.